The US dollar has strengthened quite considerably over the last 6 months, has strengthened about 10% against the pound over the last 6 months, about 15% against the yen, and about 20% against the euro. But the surge has not been limited to developed markets. Overall, on a broad basis against emerging markets, the US dollar has also strengthened about 7%. And in an even broader context, at the world level, the US dollar has strengthened about 10% over the past 6 months. The US dollar has strengthened about 10% on a broad basis. Factoring that in, it means that the US dollar is about 4% more expensive than it has been over the last decade. That being said, since the US dollar started from a very competitive point, it's still about 4% cheaper or more competitive than its long-term average. What's more, it's about 12% more competitive than its 2000 to 2004 period. That does not mean that the recent surge in the US dollar will not have an impact on the US economy, but rather that the impact will be more muted than had the dollar started from a much stronger position. In order to evaluate the impact of the strong dollar appreciation on the US economy, Oxford Economics ran its global economic model. The main findings show that a gradual 10% appreciation of the US dollar reduces the export contribution to real GDP growth by about 0.2 percentage points in the first year. Similarly, the increased drag from increased imports adds a drag of about 0.1 percentage points on real GDP growth in the first year. And finally, the drag on business investment is also about 0.1 percentage points. As such, the total drag on the US economy of a gradual US dollar appreciation is about 0.4 percentage points. We have highlighted the negative effects of a stronger US dollar on the US economy, but there are some important opposite effects that have to be taken into account when looking at the stronger US dollar, namely that a stronger US dollar supports global growth, and in a sluggish global growth environment, this is a net positive for the United States. This is even more so the case in countries like the Eurozone or Japan, where both growth and inflation have struggled to take off.